Thanks for tuning in to Talking Point. I'm your host, Mayur Shah. Real estate has been the talk of town this year. The index has gained 43% in the year alone compared to Nifty's 12% return during the same period. As the earnings season kicks off, though, several companies have started sharing the business updates for the quarter. One of these names, was Marathon Next Gen Real Estate. The first quarter pre-sales saw a decline of 46% YoY. Collections, though, saw an uptick of 17%. To put these numbers into perspective, because pre-sales can be a bit confusing, let's get in Mayur Shah, Managing Director of Marathon Group, on the show. Mr. Shah, good having you. Thanks for taking the time out. This is Neeraj here. Good morning.
Good morning.
Can you put the numbers into perspective? Because most MMR players have spoken of very strong pre-sales and actual sales. The 46% decline from your end seemed a bit surprising to that extent.
In my opinion, real estate should be looked into, in a 6 to 8 quarters and not on quarter-on-quarter basis. Because what happens is that every project cycle comes to, around 3 to 4 year project cycle. And if you look at it, the last year, our first quarter, there were various launches which happened, and there were a lot of ready-to-moving inventory which got, captured and sold. So, but the momentum of, if you look at our collection numbers, are still very strong, robust, almost 278 crore for this quarter. So, the groups, the companies' launches are actually planned, the phase 2, phase 3 of the ongoing projects are planned in the second, third and fourth quarter of this year. So, these numbers really catch up over the period of time. If you look at our last year's results, it is already, there's a PAT is a jump by almost 36%. And our average realization, we being a Mumbai-based project company, average realization is also going up, almost like 11 to 12% for the same built-up area sold. We are getting a realization more. So, these are the thing. Overall, we are seeing a very good run for the real estate across our project, whether a luxury residential project or whether commercial office space that being built by Marathon. We are seeing a very good traction across the even middle segment at Panvel Marathon Night Zone with Atal Bridge now operational. It's only 40 minutes drive to the Panvel from South Mumbai, and that we are seeing a very good traction coming up with our new launches in the third and fourth quarter for the Marathon Next Zone phase 3. So overall we are seeing a good future. We have got good land bank tied up for next 4 to 5 years. Last quarter, we tied up another 14-acre land at Bhandup for mid-segment projects called Neo Homes. And that is also selling very fast, a very good pre-sales numbers which we get in Bhandup across the projects which we have already launched in past. And the same thing which we expect for next 4 to 5 years, where we'll be developing this 14-acre land.
Got it. Okay, so sorry, I just want, because it's a long answer, I'm just trying to understand. Let's assume I'm talking about the year as a whole, Mr. Shah. What do you think your numbers could be like if I take into account that it may be long to look at the pre-sales for quarter one alone? How do you envisage FY25 to be like?
So FY25 will be more or less on the same line. We are envisaging the growth in the sales as well as in PAT. Exact number that I have not been able to disclose, but we have a good project pipeline which will give us a growth during this year also. And we are also looking at adding some more projects during this year. We are looking very aggressively on the redevelopment project in Central South Mumbai. And some of those projects are almost in the final phase. So maybe we'll be able to announce in the year end of this year. The project pipeline is very strong. And in my opinion, the segment and the micro market we are working, the sales are really very good.
Okay. Okay. Would you need to do any kind of fundraise, Mr. Shah, for the balance of the year in order to execute projects, part one? Part two, is there any consolidation of land banks or any other corporate action that might be coming up in the near term? There are rumors of both happening in FY25 with regards to Marathon.
Yes, so the board has taken an enabling resolution in the last board meet to raise, near to 500 crore kind of equity raising through QIP route or any other route. Yeah, mainly the group is looking at the expansion and adding of new projects is the main purpose. The existing land bank and existing projects are already tied up and fully paid for. So there is no need of a land acquisition for the existing land bank, which is also quite robust to take us for another 5 to 7 years. However, we keep on, adding projects, and for that we may need fundraising. On the second question, which I've been contemplating for quite some time, the group as such, like Marathon Group, has a substantial land bank across MMR region, like almost 50-70 acres in Dombivali, in Bhandup close to 100 acre, in Panvel close to 100 acre, and Thane also. So, there was a suggestion, and there is a committee. We have board has formed a committee on kind of looking into this aspect. However, there is no, there is outcome is to come in next couple of months or 1 quarter.
Okay, but could happen in the rest of the year, Mr. Shah? Could happen in FY25, not necessarily the next couple of months, maybe.
I mean, it's very forward-looking thing. When the committee comes up with the whole, proposal, they will take a call on that.
Okay. My final question, Mr. Shah, and which is, you mentioned that FY25 would pretty much be similar to FY24, if I'm not wrong. Would FY26 be a year of growth, you think?
Yeah, I mean, continuously, because see, what is happening is that we are adding a lot of projects, and the past projects are also, like, for example, the Monte South project at Baikala, 12.5 acre land. We have just realized in our books only 1.2 million square feet. 2.8 million square feet are yet to be, realized. There are various launches which will be happening in the coming years. We have a large commercial building also, which we are looking at to launch sometime in the next year. So, the pipeline is very robust, and we are very Mumbai specific, where the market is very strong. And I just want to add here, the commercial market has really come back. And what we've been seeing is a very good sales as well as leasing inquiry being floated in the commercial segment in Mumbai. Walk to work and work from home and those type of culture is slowly disappearing. And we've been seeing that many of the companies want now their all employees to come all the days. And that really is driving the commercial segment in Mumbai.
Got it. Okay. Okay. We'll leave it at that, Mr. Shah. Thanks so much for taking the time out, and all the best for the quarters ahead.
Thank you.
That's Marathon Group, and Marathon Next Gen Realty cracked about 6% yesterday on the pre-sales numbers, but Mayur Shah saying that that is a 1 quarter phenomenon. They'll recovery because for FY25 he believes it'll be a similar year to what FY24 was. FY26 might show some growth. Okay, watch out for Marathon. Important because the stock had a bit of a slam dunk in trade yesterday. Well, take a quick break, but up next we talk about real estate, markets, valuations, autos and more with a very special guest. Manish Sonthalia joins in. Stay tuned.